What's up, guys? Welcome back to RT2CC Comic Club, and today is another recap video of Monday and Tuesday. So yesterday, I'm just gonna go over what happened yesterday. I did a lot of trading because, so on Friday I bought those calls for JD, Zillow, and Disney to try to make a quick profit right before earnings. Well, luckily all three calls I bought already went into the money before the earnings were reported, so I sold those. The Zillow calls sold for $333 profit, or 88% ROI. Disney sold for $485 profit for 109% ROI, so I was stoked on that. And then JD, 62% ROI, $268 profit for a total of $1,087. I was super happy with that, just for a quick, one-day turnaround. And I sold my Ferrari calls because I noticed that it's already May, so the January 2019 calls I'm gonna have to start looking to get rid of pretty soon. I don't want to hold on to them too long, but made a profit on that one. Made a profit on the Nvidia calls that I sold. I had one that expired this September, so that was expiring really soon. Luckily got out of that one with a 76% profit. And then the Nvidia calls, and I'm pissed about this Nvidia calls because I bought them June 9th of last year, so all I had to do was hold on to them till like June 10th or 11th this year, and I would have avoided the short-term capital gains tax. I wasn't thinking. I sold them. Still made 170% return on all those, so I was stoked on that. 12,000 profit. You wouldn't really tell based on how much money we've been losing, but I guess those are just like the small handful of options that we've actually made profit on. So yeah, there you go. And other than that, I'll go over some articles that happened. So let me get my iPad here. Let's get this rolling. Okay, so with Zillow, I did buy some new calls for Zillow, and their stock went down after earnings. So Zillow stock falls 6% after week guidance, so that kind of sucks. I'll post a link. If anyone wants to read these, it's kind of late by the time you'll see this, so we're just gonna kind of rush through these. Let's go to the next one. After the bell, the Dow gained 95 points, but this is not supposed to happen. I thought this headline was pretty interesting. So this article, it's kind of being weird. Like, it's like popping up an ad and I can't get rid of it. So it's kind of like blurry, or it's not blurry, it's just faded a little bit. I did read the article though. It has to do with oil going up in price and the US dollar going up in price. Normally that doesn't happen, he's saying. I'll put a link in the description because I'm not sure what to make of his final concluding statements. So I want you guys to read it. It's a really short article. It should only take you about a minute to read. But yeah, comment below what your thoughts are on that. I think he kind of said that the market-based, it's hard to read, indicators of global growth continue to improve. He's saying that both of these suggest that the US economy could be set for a pickup in growth, even if the commentary doesn't seem convinced that's the case. So yeah, what are your thoughts on that? But read that article, it's pretty interesting. Let's go to the next one just because we're trying to whip through here. US government bond yields inch higher as traders look ahead to inflation data, auctions, and then this article. Quickly, the U.S. Treasury yields inched higher on Monday as traders looked ahead to key inflation data later this week and a series of debt auctions that could offer clues to demand for the government paper. And so you can check out that article about how the treasuries are performing and what's driving the bond market. It's good. I don't have time to read all of it, but because there's a lot in this article, so give that a read. Sorry, I'm like giving you guys homework, but I mean, if you want to get in the market, you should stay on top of what's going on. So. This one was called What You Should Know About, this is an opinion piece, What You Should Know About the Most Popular Timing Indicator in U.S. Stocks. In the front headline says, the 200-day moving average is widely followed but gives off false signals. So I thought that was interesting because a lot of analysts use that as something to look at. But if it's giving off false signals, I feel like people should be talking about that more. So I don't know, that's interesting. It says the most popular timing indicator is the 200-day moving average, but the indicator derives its power not from anything innate in the stock market, but from the legions of investors who believe in it. It often becomes a self-fulfilling prophecy. I've been saying this for a long time. I mean, maybe not specifically about the 200-day, but I think I did mention it. I swear I mentioned it. But it's kind of like, if that average wasn't there, people wouldn't know if the stocks were doing bad, and therefore they might buy more stocks, which would actually prevent them from going down. But knowing that it's there and seeing a stock go below it, it's like, it could scare people into selling, which makes it go down further. So it's like there's a bunch of self-fulfilling prophecies in the stock market. I've talked about a couple of them before, like the sell in May, go away prophecy. Just because it happened in the past doesn't always mean it's going to happen in the future. Times are changing, and I think people being scared of a downturn in May is what causes the downturn in May, because then they end up selling, and then blah, blah, blah. Like, you know the rest. So this is a good article. Definitely give that one a read, and let's keep moving. There are still great buying opportunities in this Buffett bounce. This one just says, when others are panicking, that's when it's time to go in and buy. Jewel Financial's Quint Tatro says. He says stocks were tepid and on the precipice of decline until Warren Buffett announced his big Apple buy. So, and then he says right now there are still some great opportunities. So give that article a read. I will link that as well. I think this takes us to today's articles. Okay, so this one's called After the Bell, Dow makes a roundup to nowhere as U.S. exits Iran deal. So the big news today for Tuesday was the Iran deal. Donald Trump did pull out. A lot of people are saying it's going to cause a lot of spikes in gas prices. I personally don't really... That doesn't affect me personally because I have a hybrid. So if you are worried about gas, I would suggest getting a hybrid because they save a lot of gas and a lot of money on that. But I forgot to mention what we made yesterday. So we did have a good day yesterday. I'll post some screenshots of how we did. You can see the winners. You can see the losers. I can't remember off the top of my head. And then today was really calm. We only made, I think, about $700, so it was not a lot, but I'm totally fine with that. So what else was there to talk about? Let's see. This one says, yeah, okay, so I'll post a link for that description. There's two more articles that I'm going to link to. This one's called Should China Thank Trump for the Russia Sanction Reversal? I haven't read this article yet, but it says the aluminum industry has been roiled by President Trump's policies this year. Earlier in the year, Trump imposed tariffs on U.S. aluminum imports. This move was followed by threats of more tariffs on Chinese products worth billions of dollars, which rattled the markets. The next salvo from President Trump came in the form of sanctions on Rusal, R-U-S-A-L, the leading Russian aluminum producer. The sanctions lifted aluminum prices to multi-year highs. However, after the sanctions were extended and watered down, aluminum prices fell sharply. His reversals have created uncertainty in aluminum markets. Yeah, it says China has the advantage now because of that. So yeah, good article to read. Interesting article. If you guys invest in aluminum, I don't know if any of you do, but yeah. Last article, Goldman blames mom and pop investors for volatility in stocks. Retail volume leapt to the highest levels in at least a decade in early 2018. That's very possible because, the less experienced people are, the more likely they are to freak out. And even inexperienced investors can freak out. But yeah, especially with February and March, how that was, even April, lots of volatility. So, another self-fulfilling prophecy. Once people start reacting, other people react, and then that creates the outcome. Kind of. I think I don't know if that qualifies as a definition, but it's pretty close. Yeah, he says, while retail investors individually control small amounts of money relative to the portfolio managers or other professional participants, their collective influence in the market is sizable. Per their data, households directly own 36% of the $46 trillion in U.S. equity market, more than any other type of owner, and their shares rise to more than 50% if you include indirect ownership through mutual funds and exchange-traded funds, ETFs. So that's interesting. So yeah, give that article a read. If you read it already, good for you. If you know what's going on, good for you. But if you haven't, just, it's worth reading. It doesn't take much of your time. It's time well spent. And we're gonna leave it at that because I don't wanna waste any more of your time. So if you like this video, please hit that like button and subscribe if you haven't already. We're gonna see how Wednesday goes. Hopefully it goes well. I did wanna mention one more thing, that after Trump pulled out of the Iran deal, I was expecting stocks to kind of tank, but they kind of actually went up a little bit. And so we'll see what happens. It's kind of interesting. So we're gonna see what happens tomorrow. Hope you guys had a great day. And yeah, one more time, we'll see you tomorrow.